welcome. This is Business at 9. I'm Shibani Gharat, and joining us from Chennai is my colleague Jude Sanit. Now, let's speak about the US markets at the start of the show. US market is currently all in green, while the Dow Jones is higher by around 100 points. Nasdaq is leading gains. A weaker than expected July's non-farm payrolls data show the economy lost 2,300 jobs compared with expectations for an increase of more than 80,000 jobs. The unemployment rate fell to 4.1%. The S&P 500 is up 0.6%. The Nasdaq has gained 1.1%. Markets are also on track for the second consecutive week of gains, led by a strong rally in semiconductor stocks. My colleague Meryl is here with more details.
Right, so it looks like the US markets have once again opened up in the green. All three major indices are firmly positive, and this is marking the second straight week of gains for the US markets. The big trigger this time was a weak US job reports. Now employees have actually shed 23,000 jobs in July, while job gains in the previous month were also revised sharply lower. Now, on the headline, while this looks like a bad news, it seems to be raising hopes that the Fed Reserve could have more room for an easing monetary policy, which is a plus for equity markets thereon. Meanwhile, strong corporate earnings are also keeping sentiment upbeat. Atlassian has jumped 30% after beating estimates and giving strong guidance for its future as well. Airbnb has rallied 14% on the back of a strong quarterly performance, and Cloudflare as well has gained upwards of 6% so far. On the commodity front, we're also seeing crude prices edging slightly higher as investors continue to watch that potential US-Iran deal to reopen the Strait of Hormuz. We've seen WTI trading at around $78 to $79 a barrel, while Brent crude is staying near that $83 per mark. So despite a surprisingly weak job reports that has rolled in, markets still seem to be taking this positively on the back of the rate cut hopes, which are now seeming to boost investor sentiment in the US markets.
Well, thanks for that comprehensive roundup of the markets, Meryl. But do stay on with us, because the numbers for Ola Electric are out as well for the first quarter, and the losses for the company have narrowed to 336 crore rupees versus a loss of 428 crore in year-on-year terms, even as EBITDA loss also improved on a year-on-year basis, but revenues declined 45% to 455 crore rupees, missing estimates. On the operational front, Ola Electric saw a sharp sequential recovery, with orders and deliveries nearly doubling quarter-on-quarter, while market share improved to around 8.4%. So, Meryl, revenues are halving, but that loss is narrowing as well, you reckon?
If you take a look at the headline numbers, it seems like Ola Electric has posted somewhat of a mixed set of first quarter numbers. We have seen a sharp decline in revenue, but what's also come out good for the company is that it's seen a strong recovery in volumes as well as its market share. Revenues have fallen 45% on year-on-year, but the net loss for the company is also narrowed, and EBITDA has also the loss over there has also narrowed. That has actually come in line with the street's estimates. The bigger positive, however, was on the operational front. We've seen orders nearly double on a sequential basis. This has also led to deliveries jumping 94%, which has led to the company's market share rise significantly. The market share for Ola Electric this quarter has come out to 8.4%, increasing from just 5.1% in the previous quarter. Importantly, this recovery was also broad-based across regions. We've seen West sales rising up 61% quarter-on-quarter. North and South sales also grew up to 54%, while East sales as well clocked that 34% growth all sequentially. Ola registrations also surged about 97% sequentially. So while the revenue performance seems to be a bit of a disappointment in terms of the street's estimates and also on a year-on-year, quarter-on-quarter basis, the key takeaway from the quarter is the strong rebound in the company's volumes, registration and market share. So on the operational front, it looks like a good quarter for Ola Electrics.
Right, Meryl, thank you so much for that. Now, moving on, let's go over to the Titan Q1 FY27 numbers. Now, Titan has reported a strong Q1 FY27, while profit surged over 65% and revenue was, in fact, up nearly 25% as compared to last year. Margin also expanded. Watches, jewelry and eye care sector also saw over 20% revenue growth as compared to last year. Snehi is here with more details on this.
Well, yes, Titan's Q1 has been a very strong show and a beat on most fronts versus our expectations. On a standalone year-on-year basis, the revenue has come in at 18,101 crore. This is a slight miss versus our expectations because we were expecting this number to come around 19,000 crore rupees. However, the EBITDA PAT and EBITDA margin, most surprisingly, has done very well. The margin number has come in at 14.2% compared to 11.2%. A very good uptick of about 300 bips on a year-on-year basis and much stronger than what we were expecting. Now talking about the segments, jewelry business has done really well. The revenue is up 24.4%. There has been a one-off custom duty gain of 407 crore rupees. So the EBIT margin at 14% and then adjusted for the custom duty gain at 11.6% is still much stronger versus our estimates and versus the management's guidance of 11 to 11.5%. They've said that the growth was led by Akshay Tritiya and their exchange programs. All portfolio brands have done well. Tanishq, Mia, Zoya have all grown at 38% combined. Carrot Lane is up 40%, so good show over here. Damas revenue at 396 crore rupees. However, on the flip side, the international business has recorded a loss of 8 crores and Damas loss has come to 67 crore rupees. Moving away from that to watches, good show, 22% growth over here. Analog watches have grown in 20s. Eye care revenue is up 22%. EBIT margin for eye care business is also at 8.3%. Emerging business has done well with an 18% year-on-year growth, and their engineering business has also seen a 43% year-on-year basis growth. To sum it up, Mr. Ajay Chawla, the MD, has said that consumer business has registered 40% growth. TEAL is growing from strength to strength, and they continue to remain focused on brand investment. Overall, very strong set of numbers from Titan for Q1.
Well, shifting focus from consumer markets to banking next, SBI posted its Q1 numbers. It was a mixed quarter for the banking giant. Profit beat street estimates while asset quality remained more or less stable. Mithali, tell us a little bit more about SBI's earnings.
Right, so a very good set of numbers coming in for State Bank of India for Q1 FY27. And if you see, the NII was in line, but the profitability was a beat against the expectations. And also on the margins front, they have delivered a strong growth. And also, if you see the asset quality, that remained quite positive for this quarter. Profit after tax has risen by 10%, beating the estimates, while NII was up 15%, largely in line. The biggest positive, as I mentioned, was the net interest margin. Wholesale bank NIM, that has expanded by 5 basis points sequentially, outperforming the street expectations of 2.77 odd percentage, indicating that the impact of the lower policy rates has been better managed in this quarter. Operating profit also outperformed, driven by disciplined cost control, despite a modest increase seen in their operating expenses. The asset quality, that remained a key strength for the company. Also, provisions increased as expected on a sequential basis, but remained broadly in line as the estimates were. Talking about the business momentum, that was quite healthy for this quarter, with advances growing by 19% yearly, led by a broad-based growth across the retail, corporate as well as the SME segments, while the deposits were up by 9.6 odd percentage. Overall, a strong quarter coming in for SBI, and if you see, beat across the NII, beat across the profit after tax, and largely in line top line, and again a beat on the margins for the company.
The lag between credit growth and deposit growth has to be seen. What is the liquidity available to a particular bank? SBI has almost 4 lakh crore excess SLR today. So we don't aggressively price our deposits. For us, deposit is a franchise activity. And as far as the wholesale deposit is concerned, is a treasury activity. So while 18% credit growth has been there, we didn't have any funding concerns because we are able to fund through our treasury. Having said that, if you see our savings bank current account has shown a phenomenal growth, and even on the retail term deposit, 14.4% growth rate year on year. So there's no concern on the gap which is emerging, but I think the gap would probably be narrowed with the FC and RB flows coming in this quarter.
What would be that narrow? What will be
so we are seeing around, as we speak, around year-on-year growth rate of 10.6 to 11% now.
Okay, and you're also moderating the full year credit growth to 14 to 15%.
Yeah.
Is that because of the base effect which is going to come in this third?
One is the quarterly numbers are a little, you need to take the base impact also into account. But I think the credit growth has to be seen from the lens of GDP growth rate. And we always gave our guidance based on what could be the nominal GDP growth rate. And our house view is around 12% is the nominal GDP. And we have been growing 2 to 3% over the nominal GDP. That's how the guidance is worked out.
Now, RBI has issued draft rules on prudential norms around capital adequacy of banks. These rules will be effective from April 1st, 2027. My colleague Anurag Joshi is joining in with more details on this.
The Reserve Bank of India has issued draft rules on prudential norms on capital adequacy of banks. Rules will be effective from April 1, 2027, and the minimum leverage ratio for domestic systemically important banks will be 4%. This ratio will be 3.5% for the other lenders, and the branch of a global systemically important bank will maintain a leverage ratio of 3.5%, and a GSIB, which is a global systemically important bank, will keep a leverage ratio buffer. This will include any additional leverage ratio buffer set by the home regulator of that global lender. The capital distribution constraints on the GSIB branch that does not meet its leverage ratio buffer will be there. The capital distribution constraints will be imposed on the branch will depend on its CET1 ratio, and global systemically important banks meeting CET1 and leverage ratio won't be subject to the minimum capital conservation standards.
Meanwhile, there's an important clarification coming in from the Payments Council of India. In fact, the council has released an FAQ on MDR on UPI and has also clarified that UPI will in fact remain completely free of charge for consumers, and there will not be any charge attached to the use of it by way of transaction fees. In fact, my colleague Sumita is joining us on the phone line on that very important clarification. Sumita, it looks like for the foreseeable future, at least you and I will not have to be paying for Google Pay or any other UPI app for that matter.
To be seen, Jude, once this comes into effect, whether we'll be made to pay or not. But yes, as far as this clarification is concerned, this one does mention, as part of the detailed list of FAQs that have been released on MDR on UPI. In fact, the first point itself mentions that UPI actually remains free of consumers, and there are not going to be any transaction charges for users. It also says that small merchants or Kirana stores will not pay MDR for accepting UPI. Now, these 2 points are very critical as far as MDR on UPI is concerned. Remember, this was, of course, part of a bill that Lok Sabha approved on Thursday. In fact, this legislation actually seeks to fund UPI's next phase of growth, and this could actually lead to the scrapping of zero MDR provisions. Remember, that's under Section 10A, and this allows banks and payment systems, or PSPs, to likely impose charges on high-value UPI transactions. So, of course, this clarification is important because there have been concerns that, UPI has been such a success story, and we've been exporting our DPI infrastructure, UPI infrastructure to other countries, and it's been absolutely free of cost, and which is why you may have seen post-COVID, there's been an uptick in cases of people actually adopting UPI, so much so that, people like me, we don't use cash at all. So definitely this remains a concern, but of course, this has been assuaged and allayed by PCI, and it has released these detailed FAQs. So let's take a look at the other aspects that PCI has mentioned. It says that banks, fintechs, and NPCI and RBI, they have invested in UPI's technology, cybersecurity, and fraud prevention. And of course, large merchants, whenever they pay a certain service charge, that will be under commercial arrangements with payment providers, and consumers won't be charged even if large merchants pay for payment acceptance. And of course, at the end of these FAQs, it does mention that sustained investment is crucial for UPI security, resilience, innovation, and 24/7 availability. So, of course, there is a debate raging at the moment on why, although merchants will be made to pay for larger transactions, but will merchants then not pass on that cost to consumers? Because remember, that is something that we've seen even with OMCs, we've seen that with auto companies as well. And whenever there is an external crisis, prices get elevated. They are increased for consumers, the end consumer. So, of course, that is a big key consideration. We'll have to see how this really plays out over the next couple of days.
Thank you so much for this update. On that note, it is time for us to slip into a very short break on Business at 9. You don't go anywhere. We'll be right back.
Welcome back. You're watching Business at 9 with myself, Jude, Sanat and Shibani Kara joining us from our Mumbai studios. Moving on, the government has tightened the drug approval process by notifying stricter rules to curb the submission of fake or fabricated data. The Health Ministry has in fact amended the drugs rules, empowering both central and state licensing authorities to debar applicants found submitting forged documents, misleading information, as well as fabricated scientific evidence. My colleague Akansha joins us with the latest on these details.
That's right. The government is now tightening the rules around drug approvals to crack down on fake and fabricated data submitted by applicants. The Health Ministry has amended the Drugs Rules 1945, which will give licensing authorities more power to act against companies or applicants who submit fake documents or fabricated data during the drug approval process. Now, this includes not just forged documents, misleading information and fabricated scientific evidence. In fact, licensing authorities will now have the power to debar such applicants, which means that they can be stopped from applying for drug approvals for a certain period. And this power will not just be with the central authorities, even state licensing authorities will be able to debar applicants if they found submitting fake data. It's important to note here that this debarment will be in addition to the existing penalties under the Drugs and Cosmetics Act. The government says that the move is aimed at strengthening the integrity of India's drug approval process and ensuring that medicines entering into the market meet the required standards of safety, efficacy and quality. The Health Ministry in fact also says that these changes will help align India's drug regulatory framework with global best practices. Lastly, remember, this is a final notification following stakeholder consultations on the draft rules that were released in October 2025.
Akanksha, thank you so much for that. Now, MEA has responded to US lawmaker Riley Moore's statement on the proposed Foreign Contribution Act Amendment Bill. Now, MEA has said that the legislative matters concerning India are our internal affairs. Republican Riley Moore had called the legislation an attack on the Christians. Let's listen in to the MEA response.
We have seen the comments. Legislative matters concerning India are our internal affairs on which decisions are taken by the Parliament of our country. I would also like to point out that there are several nations, including the United States, which regulate the flow of foreign funds.
Well, shifting focus to some entertainment news next. Marvel Cinematic Universe's Spider-Man Brand New Day hits a milestone with becoming the highest grossing film of 2026. Now, the fourth film of Tom Holland as Spider-Man crosses the $1.5 billion mark worldwide in just 7 days. Clearly, the small potatoes, it seems, are making big earnings. My colleague Shaurya gets us more details.
And with great power comes great responsibility. But for Spider-Man, it is also a great box office run, as Spider-Man Brand New Day is not just critically acclaimed, but it is rewriting records at the box office, as Spider-Man Brand New Day has become the biggest movie in 2026 in just 7 days, and it has crossed $1.15 billion worldwide, making it the highest grossing film of 2026. And here's what makes it the biggest film of 2026, and here's the story behind the remarkable run at the box office. Spider-Man Brand New Day has become the fastest movie to reach $500 million mark. After that, it is Avengers Endgame, the biggest Avengers movie yet. And after that, it is Star Wars, one of the biggest franchise in Hollywood. It has beat all of them to get this title. And the success isn't just limited to global or Western markets. In India, it shines as well, as it has collected nearly 72.44 crores on the opening day, and the weekend was a great weekend for Spider-Man with 257 crores in the weekend, and it has set a new benchmark for the Hollywood films in India, and it has overtaken Avengers Endgame and has become the biggest Hollywood release in this country. And after that, in India, it is Avatar: The Way of Waters. So yes, Spider-Man #1 at collection of 257 in the first week, then Avengers Endgame, and then it is Avatar: Way of Water. But its dominance is not just in Hollywood films, it is one of the biggest film in this country in 2026 overall. It dominates the Indian box office as first week collections for this movie have been tremendous. 380.8 crore rupees in the first week, and it has beaten 1 week records of Dhurandhar and Border. So overall, Spider-Man Brand New Day is creating a new set of record in the box office, not just globally, but in India as well.
Well, Shaurya, thank you so much for getting us those numbers on, Spider-Man series crossing $1.15 billion worldwide in just 7 days. That's really fabulous. Well, with that, it's a wrap on this edition of Business at 9. Goodbye from me, Shibani Gharat, my colleague Jude Sanit, and the entire team of ET Now. Have a great weekend.